Let today be the day you give up who you've been for who you can become. Hal Elrod. My friends, 10 to 15 minutes a day, you want to be able to track stocks and ETFs. Do you want to have that technical analysis ability, what we call charting? Well, my friends, it takes some time, not a lot of time, 10 to 15 minutes a day following these charts with us. If you don't have our book, I encourage you to buy it. But you know what I encourage you to do first is just stick with us for a week or two. Go ahead, sign up free for the website. Go to the website, sign up for free so you get our daily reviews in your email box every day. Plus, you'll get those PDFs for the daily market worksheet, weekly market worksheet, and trade worksheets to help supercharge your training, and the daily trainings that we put out every day in your show notes. The training today, Finding Your Own Aha Moment. You will love that one. For those of you who are subscribers, check it out every day. Make sure you listen to those trainings. We have those arranged in a great order that, again, just bring you along. Now, let's start. We see stocks and gold down for the day a little bit, not a lot. We see bonds up some. Let's talk about what we see on the chart for Tuesday on the weekly chart. We look at the weekly chart, we can see the candles a little higher, not reaching a higher high. If I move out of the way, both the weekly and the 2-day, you can see that we reached a higher high last week, but we do see an up candle. It is a green up candle, and again, the candle itself is a little bit higher. The all-important price percent oscillator is pulling away from the red signal line. Derivative oscillator gaining upward momentum still. Go to the 2-day. What do we see there? Now, we can see, and I'm going to need to move my 2-day back to the crossover. It's just messing around with it, and it screws it up a little bit. But, well, you can see there, that's where we hit the high on the 2-day candle ending the 9th. That represented both Friday and Monday. That was the Friday, let me do that real quick, 6th of November, and Monday the 9th. Then we had, that's where we reached the high, but again, we continued to have things move up. Price percent oscillator pulling away from the red signal line, derivative oscillator heading up. That's good to see. Prices above the 2-day trend line. We want to see that. And you know what I have not done? And that is my fault. I have not redrawn. Well, you know what? It's because I really can't do it with just... You can't, one thing that you learn about drawing trend lines is you can't draw a trend line on a candle that's still drawing. It will screw it up, it will change. So I'm just going to sort of park it down here for the time being. At the end of the week, we can redraw that. But we see that prices above the weekly and the 2-day as that derivative oscillator gains momentum and the price percent oscillator heads up. Now we see where things have topped over the last 2 days. We had a little bit of down movement in the morning, recovery a little bit in the afternoon, but still down for the day, a little over 0.5%. Price is still moving up that weekly trend line. It hasn't, that half-day trend line hasn't violated that and is above, of course, the 2-day and the weekly. We do see the price percent oscillator heading down, hasn't crossed over going down. Derivative oscillator still positive. So we'll watch, wait and see. We'll see what Wednesday, Thursday, and Friday have in store for us as we move forward. Now we leave the S&P 500, go to the Nasdaq 100, still negative. We can see that price percent oscillator is just about flat. Derivative oscillator is losing downward momentum. We have a red open box candle, which is a slowdown in the up movement. It still shows some up movement. It's just slowing. A solid red down candle, particularly with a wick on the bottom, is a down candle. So we'll continue to watch and see. We go to the 2-day chart, and again, these 2-day candles did finish drawing today, still perking up. Now that movement was what happened actually on Monday because it was down a little today, down 0.32%, but that price percent oscillator still heading up, derivative oscillator heading up. Look at the half-day chart. Again, we can see where things peeled off in the afternoon, sitting right there on that half-day trend line above The 2-day hasn't crossed over yet. Derivative oscillator still positive, so we'll continue to watch, see how things sort out. Now remember, because the weekly is in a confirmed down move and the 2-day is in a confirmed up move, we don't have a trade. You don't have a trade when your weekly and 2-day are conflicted. They both have to be moving in the same direction. We particularly like weekly vertical crossovers. Those are always the strongest movement, followed by 2-day recrosses. That is where the 2 days moved in the opposite direction of the weekly after a weekly vertical crossover has occurred. Then it moves back in the direction of the weekly. That's what we call a recross. Of course, those things are explained fully in our book, Charting Your Way to Wealth, and autographed copies waiting for you here at Charting Wealth World Headquarters. So follow the link in the show notes if you want it. Now, what do we see with bonds? Bonds up for the day 0.65%. And look at the weekly candle we have here. It's a green spinning top, almost a doji. Lots of indecision after things had moved down for 4 weeks in August, sideways most of, well, pretty much all of September, down in October, and then down strong last week, that second week in November. And then look at what's happening now. We have lots of indecision. So we'll continue to watch and see what's going on. Derivative oscillator, again, is losing downward momentum, starting to slide sideways. Derivative oscillator losing downward momentum also. Look at what we have happening. We have a 2-day recross. I redrew this just before the show. How do we know that? Well, we can look over on the left-hand side of the screen and we can see that the price percent oscillator 1.05 as opposed to the 8-period exponential moving average 1.06, awfully darn close, but we'll go ahead and call it because that's what it is. Not super strong on a crossover. Could end up being a bounce off over the next 2 days if it moves away, and that's fine. We'll be glad to let that happen. And that again would have that'd be a 2-day recross moving in the direction of the weekly if that occurred. If we had a bounce off, that means the price percent oscillator bounce off the red signal line like it did back on the 5th of November. Popped up and then rolled over. So, and look at that, had 4 days of nice stroking down movement. So again, that is possible. We'll wait and see. What about the half-day chart? Again, just continuing to move up in the morning, further up in the afternoon, not up a lot, still sort of banging its head both in the morning and afternoon on the weekly trend line, moving up the 4-hour. So again, we'll watch, wait and see what happens. That's where we are with bonds. Lastly, we go to gold. Tell you, gold isn't taken off yet, is it, my friends? We heard from all the gold bugs, oh man, gold is going to go through the roof. Going to go to 15,000. Oh, yeah, I hope it does. I want to ride it up. But it peaked out about the time they were getting crazy on TV around the week ending the 7th of August when, of course, gold peaked and then has been trundling down since then. Look at that price percent oscillator heading down. Derivative oscillator negative, losing some downward momentum. And again, we look at the 2-day chart. What do we see there? Now, it's fairly flat. It has been sliding sideways for quite a while. And I mean, just as far as we can see, price movement sort of bounded there. Somewhere around 175 up to somewhere around 180. So again, just back and forth. What do we see going on right now? Price percent oscillator is about flat, derivative oscillator negative. Go to the half-day chart. Crossed over, went up for a few days, and now it's sort of rolling back over again. And that 2-day still negative. So we'll continue to watch, wait and see, waiting for these things to sort themselves out. Again, this is not typical, my friends, for the fall-winter trading zone. But remember, it was atypical for the summertime trading zone. The summertime trading zone, as we talked about throughout the summer, was more like the fall-winter trading zone. And now the fall-winter trading zone is getting all weird and more like the summertime. So we'll just be patient. We'll be patient. We'll wait for clear signals to tell us what to do, and we will follow them. Remember, we do have a weekly vertical crossover in effect for the S&P 500. and we'll continue to watch that. That, of course, happened this last Friday. So we'll continue to monitor, see how things go, and have fun doing this. 10 to 15 minutes a day, that's all we ask. Thank you so much for being with us. Buy the book, support us on Patreon, all sorts of great things there. The biggest, greatest thing we have for our Patreon members, 2 of them. The first is the 3-part series on options made simple, the Charting Wealth Way. Absolutely the best options training I think you're going to get. We keep it simple, we keep it straightforward, and it works. And I want you to get that. All you got to do is be one of any of our 3 levels, and you will get that for free. First thing we'll send to you. Plus all the other training, the short chart training, the long chart training. Oh gosh, the backtracking training, all sorts of great stuff. And then once a month, the first Wednesday of every month, guess what we have for you? The live question and answer call-in training for our Patreon members. So if you're interested, sign up. Also, don't forget $25 discount when you want to subscribe to TC2000. That is the charting platform that we use. It's unlike anything else you'll find on the planet. It is web-based and it is wonderful. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.